I recently put a tweet out saying that I used to spend all of my weekends backtesting because I thought it would make me a better trader. It's what people online and influencers told me that I had to do. But in hindsight, it was a complete waste of time. Yes, I believe that backtesting is essentially a scam. Yes, a scam is a huge word. No, I probably shouldn't use that, but I think truly that backtesting is a waste of time. And in this video, I'm going to tell you exactly why that is, what I learned from wasting hours of backtesting, and the one method, the one system or strategy that I used that's similar to backtesting that actually works, that nobody talks about because it's incredibly difficult, but it can transform your trading. Let's get into it. Okay, so I put out the tweet saying that I used to spend my weekends backtesting and staring at the charts, wishing it were Monday. In hindsight, it was a complete waste of time. I wish I had taken a break, taken a breath, stressed less. More time on the charts does not equal more money, so go enjoy your Saturday. This is the tweet that I put out. Let me explain where I am coming from and the caveat that you need to know. If you are a new trader, aka if you have been trading for less than 6 months, I think backtesting can be beneficial. You can refine your strategy, you can get more experience, you can play around with drawing tools, trading view tools. For example, if you're completely new to trading, you don't even know what a pip is, you don't even know what a trend line is or how to throw it up on the chart. So obviously you can backtest. But the thing about trading is that it is completely different than everything else in life. I was a competitive golfer, I'm obsessed with golf, and I knew that if I spent more time golfing, I was going to become a better golfer. However, trading is not like that, okay? If you want to learn a new language, the more time you spend on it, you're going to get better at that language. But again, trading is not like that. It's important that we remember as traders that the more time you spend on the chart, it does not mean that you're going to make money. In fact, it could actually mean that you make less money because you start to overthink, you do silly things, and it just completely unravels. Okay, so let me tell you about my trading story, okay? I traded for over 5 years before I made a single dollar. I spent $10,000 on Forex courses. I maxed out my credit card on several trades to go full margin. You name the mistake, I made it, okay? You name the rabbit hole, I went down it, and I made every mistake that you could possibly think of, which I think gives me a badge to speak on this, because eventually I did get funded, and for 18 months, I lived 100% off my trading income. I did not have a single other source of income. I realized several years into my trading journey that even though I was backtesting more and more and more, I wasn't making any money. And so I asked myself, what is going on here? Is 5 hours a day not enough? Do I need to do 8 hours a day? And what I eventually realized in hindsight is that I was not failing because of my analysis. I was failing because of two things. I was failing because of my emotions, and I was failing because of how I was executing trades in the live market. And both of those things you cannot improve upon through backtesting. You can backtest 12 hours a day and your trading psychology is not going to be better. You could say, oh, but I will have seen the data. I'll know that my strategy will play out. That is fine. But in reality, I never see that actually play through. There's something different between backtesting and seeing a trade play out before you even executed it versus trading the live market and actually needing to wait for your trade to play out and managing the live market conditions, okay? Number two, poor execution. And again, your execution can't really improve through backtesting because backtesting is easy. You know how it's going to play out. You don't have that emotional factor, which is really connected to 1 and 2. You can't really separate the execution from the emotion part. And so for me, I was constantly failing, and I failed for many years because of these two things. Neither of these things improved with backtesting. And I think after seeing the data from thousands of traders over 2 years at Lark Funding, I am not alone. We see tons of traders do well during the evaluation phase, only to either change strategies, change systems, have their emotions and psychology get all out of whack when it comes to trading their Lark account, and then they blow it from there. With that said, okay, many of you might be angry, might have already clicked off, many of you might be resonating with this. Either way, there is one backtesting method / system that I learned from a course that I paid $5,700 for. And so I'm going to share this with you today for free, okay? I spent a lot of money on it, so I think you'll like this. For me, the more I trade, the more I realize and understand that fundamental analysis and understanding what is going on in the world is crucial. But understanding how fundamental analysis works in real time is incredibly difficult because you can read 100 articles with 50 saying this is going to happen in the market and 50 saying this is going to happen in the market. The only way that you can really know is to actually live through the live markets, which is similar to what I was saying about backtesting and why I don't like it. However, you can actually start to see patterns by going back in time. Okay, so I'm going to break down exactly what this method is. Now, the caveat is this is incredibly difficult and incredibly time consuming, but still to this day, I think it is the only exercise worth doing, and it is incredibly valuable if you want to understand what drives markets and how you can actually apply fundamental analysis to your trading to catch way better trades and to just overall be a better trader, be more informed. Okay, you can take any pair that you want, anything whatsoever. Let's take the S&P 500. We're going to go on the chart. And what we're going to do is we're going to look for major spikes on the higher time frames, whether it's the 4-hour or the 5 or the daily time frame. Let's go up to the daily time frame. Now, I can see that as of around April 5th, April 10th, there started to be a large drop in the S&P 500. This would have been an absolutely phenomenal trade to take. Phenomenal, okay? If we go down to the 4-hour, we can see it a little bit better. Now, the question is, this move was roughly, it was 35,000 pips. It was a 6.5% drop in the S&P 500, which was huge. This was an incredible opportunity to make a ton of money in the markets. Now, the question is, did you catch it? If you did not, the question is, how could you have caught it? Now, yes, this is a form of backtesting, but rather than saying, oh, this strategy would have caught it, that strategy would have caught it, this and that, let's ask, well, what was actually going on in the real world? Because I can tell you that a trend line on the 15-minute chart is not what is moving the market. It's what's actually happening in the real world that is driving the market. So we need to figure out around April 4th, April 10th, what happened in the real world that led to this exact drop. And when something similar happens in the future, we'll be able to go through our library and say, oh, I remember when I went through that backtesting strategy. I remember when I did my research. When that happened, this was the result of the market. There was a sell-off in the S&P 500. Boom. That is now my bias. My bias is now no longer taking buys, but looking for short on the S&P 500. And you can integrate this with any technical system that you want. So I want to teach you how you can actually do this. Now, there's a whole bunch of different resources you can use. My personal favorite is Forex Live. So you're going to come to forexlive.com and you're going to come under here under more. You're going to do session wraps. The way that Forex Live works is that they have analysts working around the clock throughout every session. European session, Asian session, Australian session, American session. Anytime there is a major piece of news event or a very minor, these guys are on the ball and they're sharing it. Now, if you miss a session because you sleep like a normal human, you're going to come over to session wraps in the morning, as you should, and you're going to see, okay, what was going on. So you can see the dates here. Okay, this was May 10th. This was May 8th. Okay, there's a whole bunch. Now, if you go down to see more, you can't see the URL, but it's page 2. If you're backtesting 6 months ago, you might have to go to page 200, which I just did here. And this is going to bring us back. Wow, we are back in 2018, which is absolutely wild. So don't go back to 2018 to page 200. So you get the gist of it. So the idea is you want to find a move in the market that was significant. You don't want to go here and look for all of these little movements, right? You want to look for a significant movement, whether it's the 4-hour, the daily chart. It can be on a specific Forex pair, the pound, US, whatever it is. It can be on literally anything you want. It could be on crypto. It could be on anything. But you want to find a significant movement, and you want to then go back, do your research, and understand what was going on in the world at the time that led to that movement, okay? Stock market absolutely started ripping last October. What happened? What was going on? What was Jerome Powell saying? What were interest rates at? The fundamental picture does not change necessarily on a daily basis. It takes time, which means that to develop your fundamental muscle, it's going to take years. But if you do this strategy, if you actually put in the work, you'll be able to learn and have that fundamental analysis tool in your skill set much faster than you otherwise would. So, if the title of this video was Backtesting is a Scam, perhaps it is not. Perhaps scam is not what should have been used. But if you're going back in time and just over and over and over again implementing your technical analysis system, I think that is a complete waste of time. But fundamental analysis, I think, is a pivotal tool to have in your trading repertoire. It's very difficult and it takes many years to develop. But if you use this, I think you can get there that much faster, and I don't see anybody else talking about it. If you made it this far, please subscribe to Lark Digest down below. We're building the #1 newsletter for traders. We'd love to see you there. Thank you for watching. Let me know why you think the S&P 500 around April dropped 6.5%. What was going on? Let me know. If you have any questions, drop them down below. Drop everything down below. We'll see you in the next one. Till then, peace.